1. Stock market recap. Nasdaq hits record high. Dow slides. S&P 500 flat. July 18, 2025. 2. S&P 500 and Nasdaq smash record highs. TSMC and consumer stocks fuel rally. 1. Stock market recap. Nasdaq hits record high. Dow slides. S&P 500 flat. July 18, 2025. On July 18, 2025, the stock market delivered a mixed bag of results, leaving investors with plenty to ponder. While the Nasdaq Composite soared to a new record high, closing up 0.1% and marking its 11th record close of the year, the Dow Jones Industrial Average slid 0.3%, or 142 points, and the S&P 500 ended the day flat. But here's where it gets intriguing. Despite the political turmoil, including President Donald Trump's threat to fire Federal Reserve Chair Jerome Powell, which he later retracted, and his controversial tariff letters to over 150 countries, the markets seem to shrug off the drama, at least for now. And this is the part most people miss. The Nasdaq notched 5 record closes this week alone, while the S&P 500 managed one, all amid a backdrop of political uncertainty and inflation concerns. Bitcoin also rallied after the passage of a new crypto bill, adding another layer of complexity to the day's events. Meanwhile, Netflix, Nvidia, and other major players made significant moves, keeping traders on their toes. The week began with a flurry of inflation data and earnings reports, leaving the market in a state of cautious optimism. But here's the controversial part. Fed Governor Christopher Waller's dovish comments on Friday suggested that rate cuts are on the horizon, citing weaker private payroll data compared to government-driven job gains. While rate cuts could boost stocks by easing access to cash for companies, they also risk reigniting inflation, especially with tariffs already squeezing U.S. businesses. This divide within the Federal Open Market Committee, FOMC, is becoming harder to ignore, with some members pushing for immediate cuts and others, like Chair Jay Powell, advocating for delay. Daniel Skelly, head of Morgan Stanley's Wealth Management Market Research and Strategy team, noted, while tariff uncertainty continues, the markets may be learning to live with it, to a certain extent. But is this complacency justified? What if tariffs and premature rate cuts create a perfect storm for inflation? That's a question investors will be grappling with as they head into next week, which is packed with Treasury bill auctions and the release of continuing jobless claims on July 24. Treasury bills, particularly the shorter-dated ones, have become Wall Street's darling, offering security and a 4% yield. In the second quarter, investors poured $16.7 billion into ETFs holding these bills, more than double the amount from the same period last year. But with the Treasury Department issuing so many bills to rebuild its cash account, are we overlooking the long-term implications of this debt accumulation? As we look ahead, the market's ability to absorb political shocks and economic uncertainties will be tested. Are we on the brink of a new era of volatility, or is this just another bump in the road? Let us know your thoughts in the comments. Do you think rate cuts are the right move, or are we playing with fire? The debate is wide open, and your perspective could be the missing piece of the puzzle. 2. S&P 500 and Nasdaq smash record highs. TSMC and consumer stocks fuel rally. In a stunning display of market resilience, both the S&P 500 and Nasdaq Composite closed at all-time highs on Thursday, driven by robust economic data and corporate earnings that underscored the strength of American consumers. This surge comes amid a backdrop of economic uncertainty and geopolitical tensions, making the achievement all the more remarkable. But here's where it gets controversial. While some analysts see this as a sign of unstoppable growth, others warn of potential overheating and an impending correction. The Nasdaq has been on a tear, hitting record highs in 6 out of the last 7 trading sessions. Similarly, the S&P 500 has reached new peaks 6 times since June 27. This consistent upward trajectory has been fueled by a combination of strong economic indicators and positive corporate earnings reports. For instance, U.S. retail sales rebounded sharply in June, indicating renewed consumer confidence despite mixed inflation data. The Nasdaq Composite surged by 153.78 points, or 0.74%, to close at 20,884.27. The S&P 500 rose by 33.66 points, or 0.54%, to reach 6,297.36. The Dow Jones Industrial Average also joined the rally, climbing 229.71 points, or 0.52%, to finish at 44,484.49. These gains come after a period of volatility following President Donald Trump's tariff announcements earlier this year, which initially sent markets tumbling. Wall Street's recent performance has been a testament to the economy's resilience. Despite the initial shock from Trump's tariffs, the market has shown remarkable recovery. This week, in particular, has been crucial, with key economic reports and the start of the second quarter earnings season providing a solid foundation for these gains. Economic data and corporate earnings reports have painted a picture of a robust economy. The economic backdrop is still pretty solid, and so markets have been able to grind higher this week with some data to support where we are going, said Anthony Siglembeen, chief market strategist at Ameriprise Financial. This sentiment is echoed by the strong retail sales data from June, which showed a significant bounce back, bolstering investor confidence. However, the impact of Trump's tariff policies remains a hotly debated topic. The Federal Reserve has indicated it will hold off on interest rate cuts until it can assess the full impact of these tariffs on inflation. Fed Governor Adriana Kugler reiterated this stance on Thursday, stating that rate cuts are on hold for now as consumer prices begin to rise due to higher import taxes. Traders are now pegging the odds of a September rate cut at around 54%, with a July move nearly ruled out, according to CME's FedWatch tool. Consumer-facing companies have also contributed to the market's optimism. PepsiCo saw a 7.5% jump after forecasting upbeat results, driven by demand for energy drinks and healthier sodas. United Airlines gained 3.1% after projecting stronger demand since early July, offering a glimmer of hope for an industry strained by budget cuts and trade tensions. Rivals Delta and American Airlines also saw gains of over 1.4%. Technology stocks, particularly U.S. chipmakers, have been buoyed by TSMC's record quarterly profit. The world's main producer of advanced AI chips reported strong demand for artificial intelligence, sending its US-listed shares up by 3.4%. Marvell and Nvidia also saw gains of 1.6% and 1%, respectively. Ameriprise Siglembeen noted that TSMC's blowout earnings bode well for the wider technology sector. Before we get all the big tech earnings in the next week or two, you're seeing the single source of production of those AI chips saying their demand is very strong. So the setup for big tech is pretty positive, which is why technology is leading on the day today, he added. Both the technology and industrials indexes finished at record highs on Thursday, with financials leading the 9 sectors that ended in positive territory, advancing by 0.9%. Netflix also climbed 1.9% after reporting earnings above forecasts, aided by the final season of the global phenomenon Squid Game. And this is the part most people miss. While the market's current strength is undeniable, it's crucial to consider the underlying factors driving this growth. Are we witnessing a sustainable economic boom, or is this a temporary surge fueled by short-term optimism? The debate continues, and only time will tell. So, what do you think? Is the market's current strength a sign of long-term economic health, or are we headed for a correction? Share your thoughts in the comments below. Your insights could spark a lively discussion and help others understand the complexities of today's market dynamics.